Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. On a day or a few days before the budget comes out, the case for a chat for our guest today has to be around the budget and some other details. So, of course, we'll talk about the budget impact and whether there's a perfect balance to keep equities unfazed. Can Q1 results deliver surprises is the question that we ask as well. And whether the recovery has truly begun for IT or is it still sketchy? Joining me today is Vaibhav Sanghavi, CEO of Ask Hedge Solutions. Vaibhav, great having you. Thanks for taking the time out. I'd love to understand from you, Vaibhav, are you constructive on the markets currently, or given a choice of having a long-short position, you are more short than long currently?
So, Neeraj, I think the way we do general things in terms of any binary event which is right up there, typically we would ideally go hedged or do not take an outcome in terms of the event. Now, having said that, when I look at it in terms of very objective way, my sense is basically that the government will continue on the path which they have taken for the last 10 years. Of course, they might add a few elements in terms of increasing the disposable income in the hands of a consumer. And if that happens, then I think we will have a great combination of, on one side, encouraging good size capex. On the other side, kind of balancing it out with also with boost in terms of the consumption as well, which may lead to kind of good, decent growth, going forward. So all eyes on the budget. Let's wait, what comes out of it, and then probably we'll take a call.
Okay, so no preempting, Vaibhav. What you're saying is you're not preempting anything. You'll wait for the details to come out, and there won't be too much of losses if you're not able to preempt ahead of the budget. Wait for it to come, then we'll take a call.
Of course, because as a risk-adjusted return fund and a fund which wants to generally generate consistent returns, we as a philosophy, right? I mean, when we look for capital protection, then it's just futile to take an aggressive position against any of these kind of events. And we have always seen that once the event kind of pans out, you have ample of time to any which ways make money. So we wait, we let the event go by, and then we'll see. But I do have a sense, or probably we do think that it should ideally be good for the markets, from an overall perspective.
Okay. Vaibhav, how constructive or not constructive are you on the markets because of the valuations? Budget is one thing. Earnings and valuations eventually determine what the markets do. How constructive or not constructive are you?
Absolutely, Neeraj. I think that's the one which I think needs to be debated more and more rather than any event-centric kind of stuff going in the market. Now, typically, what you would generally also understand is that if somebody invests in the valuations which are pretty expensive, then ultimately it kind of leads to a higher gestation period to achieve your financial goals. Now, when you are looking at a whole mid cap and a small cap space at this point in time, we have some amount of discomfort in terms of the valuations which are going on. Because on the one hand, you are assuming pretty aggressive growth rates and aggressive earnings growth. On the other hand, in spite of that, we are seeing some good size, valuation kicked up, over the last, 2 years. Now, if there is any small disappointment in terms of the earnings, which we do think that there is a possibility, given that we've seen the raw material prices on general kind of inching up, and given that the companies would probably focus on top line at the cost of little margin to grab more market share, is where do we think that there can be some amount of disappointment on the earnings front. While the earnings consensus may be about 15-16%, or so, from a market standpoint, we do think that there might be, a couple of percentage point kind of downgrade in terms of the earnings going forward, at least in the next 1 to 2 years.
Interesting. Vaibhav, trying to think of different pockets, right? And IT has to feature in the thick of things simply because of the move that we've seen in the recent past, post Accenture numbers, post TCS numbers. Now, one is IT services, where valuations have come back, I think, to mean. One is ER&D, where valuations are way off mean and extremely expensive stocks out there, but maybe with reason. How do you guys think about this space?
See, let's understand first of all on the whole sector that what were the biggest worries in the last 1 year, for this sector to kind of not perform, as against the markets. Now, if you see, there were two or three primary reasons. One, that the discretionary demand on the IT side was kind of pretty weak. Two, there was a huge amount of uncertainty around the whole generative, AI, platform, or how it will probably impact the companies. And lastly, of course, that because of this, there was huge amount of initial demand in terms of the employees. There was a huge amount of attrition, and there was a pressure on the margins because of all these reasons. Now, looking at now how we are looking at from a quarter-to-quarter perspective, here is a sector where we do think that the business probably has kind of bottomed out, wherein we are looking at green shoots coming on, across sectors. It's not about only BFSI or manufacturing or healthcare. I think we are seeing spends kind of getting bottomed out across the sectors. I'm not sure how quickly it will recover, but one thing is for sure is that they've kind of bottomed out. Second, that the generative AI, which was earlier thought about that it would have a considerable harm in terms of the sector or in terms of their revenue construct. What we are seeing is basically the proof of concepts kind of getting converted into contracts, and incremental revenues or incremental stream of income has been coming from AI. So this is turning out to be a net positive at this point in time. At the same time, increasing the efficiencies, and lastly, the attrition is pretty low. So all in all, I think stars are aligned to see to that the sector has bottomed out. Of course, the cash flow yield also is something which is way better than any of the large cap companies in that sense. So there is some amount of comfort on the valuations, and the business getting bottomed out is where we do think that in the medium term, this is a sector which is likely to perform better, from a market standpoint.
Okay, and even ER&D, you like ER&D stocks too? They are very expensive, Vaibhav.
Of course, they are expensive. I think you will keep on seeing this shuffling of, segments. Now, if you are completely focused on one segment, and we all know that well-diversified business should ideally command more multiple rather than a single kind of stream of income-focused companies. So, in our view, we will be focused more on companies which have very diversified revenue base, rather than focusing on only one single growth, kind of area, which gives, a good amount of sleep, after investing in them as well. So we are fairly comfortable on the, large cap diversified names rather than on particular segment.
Okay, so net why Vaibhav can't talk about stocks, he's saying effectively that KPIT and some of the others which are single sectoral focus ER&D stocks may not be as high on his favored list as some of the well-diversified companies within the ER&D space or IT services space. Okay, so thanks for that, Vaibhav. I hope I paraphrased you correctly and I didn't make a mistake there. Let's also talk about telecom. And let me first get in my colleague Rucha, because telecom is a sector in focus today. Several brokerages are offering reports on key players such as Vodafone Idea and Bharti Hexacom. Rucha, what is it that the analyst community has to say?
Okay, so basically I'll start with Vodafone Idea. Now, Vodafone has urged the Supreme Court to urgently hear its petition against an earlier court order regarding the adjusted gross revenue. So what is this all about? Now, telecom operators have to pay a certain percentage of their adjusted gross revenue as annual license fee to the government. So the definition of revenue becomes important. Now, in October 2019, Supreme Court had ruled that the non-core revenue should also be included in the adjusted adjusted gross revenue for the calculation of the annual fees, but many telecom operators argued that only the telecom business revenue should be regarded as the telecom revenue for the calculation of the annual license fee. Therefore, Vodafone Idea has again filed a petition to reconsider this decision by the Supreme Court. Now, talking about how much dues does the company owe to the government currently, it currently owes 70,000 crore of AGR dues to the government, and Citi has come out with a note, and it believes that in case the judgment of the Supreme Court is in favor of telecom operators, this might reduce the telecom operators' liability to the government, and it also believes that the target price of Vodafone Idea can be increased to rupees 28 from 23 currently, implying a potential of around 40%, upside potential of around 40%. Now, talking about Bharti Hexacom, JP Morgan has initiated coverage on the company. Now, the company operates in two underpenetrated circles of Rajasthan and Northeast and can enjoy strong tailwinds from subscriber growth and organic ARPU expansion, according to the brokerage house. Also, the spectrum cost per population is lower than what it is for Bharti Airtel, and this might drive the revenues up. 15% tariff hike in each of the next 2 years might happen, is what the brokerage house believes, and this again will drive 17% revenue CAGR over FY27, over the period till FY27. Now, lastly, talking about FCF and dividend payouts, the brokerage house believes that the free cash flow will definitely increase, and this might lead to increased dividend payouts, and it is expected to increase from 23% currently to 34% in FY25, and this is about Bharti Hexacom.
Thanks for that, Rucha. Interesting coverage there, and the Citi note speaks about Vodafone, speaks about how Indus Tower could be an indirect beneficiary too. The sector, Vaibhav, has come into focus with the hikes taken for the first time in so many years, 3 years, and some individual businesses within the whole ecosystem having specific triggers as well. In Vodafone's case, this AGR dues, in some other case, some other thing. What are your views on the sector?
Yeah, I think, there is first of all no debate about the long-term opportunity in a country which is a population of more than 140 crores. Now, how much profitability they are able to eke out from this whole segment is something which time will only tell. But what we can clearly see is that the ability for these companies to increase their prices and getting well absorbed as well is something it's extremely encouraging. Now, it's very important as a country to have these companies profitable also, purely because it's to an extent the backbone infrastructure of how the country can progress as well. So my sense is basically, while the opportunity is fantastic, the company is being able to take these kind of price hikes, and an aspiring India where the data consumption is only going to increase rather than decrease, we should be in a sweet spot, at least from a longer term perspective. While these shorter term nuances in terms of either the court ruling or probably the spectrum or probably various other kind of smaller variables will keep on affecting the news flow in the shorter term, but as things stand, I think at any declines in the whole sector, I think it will be lapped up in terms of grabbing the opportunity from a longer term perspective.
Okay, I just want to pull up that Citi note on Vodafone, if we can, just for a moment before we take that break. Simply because if you look at some of the points that they've made, amongst other things, they're also talking about this optionality value that comes in for an Indus Tower as well. So it's not just a Vodafone and a Bharti Hexacom which come into focus. It's also an Indus Tower which is in focus. It's also a Bharti Airtel which is in focus. And that note makes the point that save for a Jio, almost everything else should be watched out for. Time for a quick break. Okay, we'll try and pull up that note later, but time for a quick break. Back with more. Stay tuned. Back with Talking Point right here on NDTV Profit, in conversation with Vaibhav Sanghavi. And Vaibhav, I would love to understand since you spoke about how valuations and earnings become the most heady point to focus on, where is it that you guys are most constructive on a combination of both earnings as well as valuations? I mean, it could well be that earnings will make up for valuations, in which case just your top overweight sector.
I think if you say in terms of the combination, I think what we like or what we are pretty constructive about at this point in time is, and again on relative basis, I think it's consumers is something which we are very keen on, especially both the segments in terms of staples or discretionary. Secondly, I think IT is something on every declines is something which we would be probably looking at as well. And banking as a sector is something which we are currently, being very neutralish rather than in spite of, valuation, which is giving us relatively, better comfort. But we are not probably, extremely keen on that. While industrials is something, industrial cap goods, power, I think as a segment where we will wait for some amount of price correction to kind of enter these segments. While the overall long-term opportunity is fantastic in these sectors, and the valuations are very rich. My sense is basically at any dips, this is something which we would probably look to kind of enter again. And lastly, in terms of the rural focus themes as well, is something which we will probably look for. So these are our relative kind of bet at this point in time, looking at the current market scenario.
Okay, just one quick follow-up before I get in my colleague Mihika. Vaibhav, the data coming out of China has been skittish at best, very variable. Real estate continues to struggle there. What's the case for non-ferrous metals in such a scenario? Is there a bull case out there or not really?
See, I think combination of two things, of course, how China, ramps up the production or probably how much absorption of inventory is there. At the same time, the underlying cost increases in terms of raw materials is something to be kind of taken note of as well. So while we may see that the prices may not drop off dramatically in kind of absence of any demand, because purely inherently there is the cushion in terms of the costs which are incurred in terms of manufacturing those products. But in terms of the volumes, we are not very kind of encouraged. So at best, metals, both ferrous and non-ferrous, I think for us is always a tactical play rather than rather than something which we kind of will buy and own for a very long period of time. So this is how we will always look at this sector, and that is the way we look.
Okay, so I was wanting to know if tactically things can do well. Let me first get in my colleague Mihika, because one of those names, which is Vedanta, is in focus in light of its fundraising plan. The question obviously is what is in store for the company going forward. Mihika, fill us in on the details, because the QIP pricing seemed to suggest that the company believed that the demand on the QIP book would be strong.
Yes, you're right, Neeraj. Now, the company did open its QIP yesterday at a set floor price of 461.26 rupees, which was higher than the previous closing price. And according to analysts, this could mean that the company is optimistic about the demand being there. A little bit for reference, the QIP details, the company plans to raise 8,500 crores via the issuance of securities. It was approved on June 21st, and the QIP opened yesterday on July 15th, and the issue price will be determined by the company later. Why the QIP? Well, it plans to reduce the debt of the company. The total debt of Vedanta as of FY24 stood at 72,771 crores, and the company's debt has been consistently rising since FY22, and now it's now the plan is to deleverage and reduce the total debt. When you talk about the debt reduction efforts, the company did garner 2,500 crores last month itself via NCDs, and the parent entity, which is Vedanta Resources, is also offloaded stake worth 6,000 crores via block deals in the past few weeks. Lastly, I want to end on certain management commentary. Now, what senior management did say at a latest analyst meet is that the company does not foresee a rollover of its loans, and it plans to deleverage as much as $3 billion over the next 3 years.
Wow. Okay. Thanks a lot for that. What would stem or what would bring about such optimism, Vaibhav, for a non-ferrous business wherein the demand in the QIP would be so big? Why would institutional investors want to lap up some of these businesses so strongly?
Yeah, I would say, Neeraj, I think a lot of reasons in the sense that one, under allocation towards a particular sector, or probably higher cash into your portfolios as well, or probably, as I say, it's just more of a tactical play, in terms of a trade. So my sense is basically why the valuations may also look cheaper, from overall metal and mining space on face of it, but you always have to look at from a cyclically adjusted kind of multiples and how the returns have been. My always guiding point, has always been a combination of price to book and where we are exactly in terms of the cycle, which will probably determine how we would essentially want to trade on the whole space.
Okay, point well noted. Vaibhav, the other aspect is autos. There's a lot of there are two factors. One, that autos have had a good run, and off late the inventory build-up might be potentially hurting some of these businesses in the times to come. Two, if indeed some of the commodity prices move up, then it's margin negative for autos, auto ancillaries, both. For a sector that has done well consistently for the last 3 or 4 years, would you take some money off the table within some of the auto segments, or would you stay bullish? Why or why not? And what from autos? I mean, four-wheelers, two-wheelers, tractors, CVs, auto ancillaries. It's a wide bucket.
Pretty bang on, I think, Neeraj, in the sense that, we largely would divide, the sector into 4 parts in terms of PVs, that's passenger vehicles or two-wheelers, then CVs and tractors. Now, the way we would look at is basically that because that we are seeing some amount of recovery in terms of the rural side of our economy, probably two-wheelers are something which will continue to be bullish on, at least in the medium term. Whereas in case of, as you rightly mentioned, in terms of the passenger vehicles, what we've seen is basically while the wholesale numbers have been pretty strong, the underlying retail numbers have not been, matching up to the kind of wholesale numbers. At the same time, the discounts also have probably, increased. So we do see some amount of pressure coming in addition to the raw material prices, which have been there on the margins. Not in the last quarter, not in the quarterly results, which will come through purely because in the last quarter there was not much of a discount. At the same time, the raw material price was benign. But forthcoming quarters, in the coming quarters, is where you will see the pressures coming, here as well. Lastly, in terms of CVs, we'll wait to see the numbers clocking in, which we are not seeing any big evidence on. And on tractors, I think that is a segment which is kind of bottoming out, and you may see some recovery coming back. Again, focused on that rural focus theme as well. So pretty broad sector, but very, will give kind of opportunities both on the long and the short side within the sectors as well.
Got it. My final piece would be, where is it that you are the most negative, Vaibhav? We've heard from you. Where is it that you're constructive? Where is it that you're negative?
See, I think, one thing we've always realized, and again, our experience in the last 17 years of managing long short is that even if our fundamental views may be negative, you have to be extremely careful not fighting the momentum of the market, right? While you have, all your work done, shortlisted sectors where valuations are not kind of supportive, and one of those segments I do think is, the cyclical piece of the PSUs rather than the reform-oriented PSUs. So that is a segment which we are closely looking at. At the same time, we do think from a banking perspective, while the valuations are okay, at the margin, we are getting, not very comfortable on that as well. So those are the segments I would say we are currently avoiding, and we'll wait for momentum to, crack for any signs of weakness there.
Got it. Vaibhav, much appreciate you taking the time out and speaking to us. Thanks for taking the time today.
Thank you, Neeraj. Always a pleasure.
Thank you. That's the view from Ask Hedge Solutions. And with that, it's a wrap on this edition of Talking Point. Thanks so much for tuning in.